The broadcast is now starting. All attendees are in listen-only mode.
Hello, Face. Hello, Warriors. How are you today? Expecting a guest warrior today. Looking for Brad Pips to join us. Brad Pips is quite the FX trader. So we'll see if he shows up in the room. Like to see how he trades. Maybe he has some of his ex's money to speculate with. Okay, let's get serious here. All right. So I have a few things to say. Of course, we're getting follow through with some dollar weakness, which is, kind of the trading pattern I look for after the euro came back and the dollar, after being much higher, finished about unch on the week. We're getting follow through. Monday for me is kind of a setup day. But I wanted to come back to something that I learned from one of our guests, and I bring in the guests for me too. So call me selfish because I learn from them. I'm bringing them in to learn, for you guys to learn and pick up some ideas and maybe have a few other tools for you to add to your trading arsenal. But Chris Carolyn of At the Spiral Calendar, when he was here, I think 3 weeks ago or so, talked about the correlation between gold and the US dollar yuan. And what I'm looking at here tells me there could be another low coming up here in the yuan for maybe 1, 2, 3 down here, which tells me that I'm going to have a chance to buy gold lower if this correlation holds up to be true. And I want to pay attention to it. Also, one of our Faith members, Ronit, who does very intricate cycle work, has a cycle due in the yuan, I believe June 18th. What else is happening that week is perhaps some type of peace deal with the North Koreans, which, you would think on the face, people would consider that to be bearish gold. And then you also have the solstice coming up that week. So that week could be the turning point for gold. So I'd love to buy gold under 300 on a peace deal. Just give me a why if you understand, what my bias is. I am bullish, but I think there's going to be one more good shakeout in the gold. So let's go to the gold. Okay. That's a silver. Similar looking silver, except for that weird candle. So I'm counting 1 here. I'm counting 2 here. So I'm looking for one more push up towards 1328, which if you look at, maybe it's a daily 50. Yeah. The daily 50 moving average comes in around 27.5, 28, with also the potential for a 3 drive. Here's 1, here's 2, here's 3. And this kind of agrees, it does agree with the count that Greg showed last week with one more push up. Maybe it happens with the dollar having a little more follow through. But I actually think that the gold might be able to rally this time. There are times when the gold could rally with a firm dollar, even a strong dollar, if rates continue to go up. So looking for a rally up to 1328 and then a flush under all the support that people are looking for. And, it doesn't even have to get up to 1328. That's what I think could happen. But if you start taking out 1316, it's going to look like a little mini head and shoulders. So either way, whether it goes here first back under 1316, which kind of looks like it was a breakout, pretty important pivot point, I think that there's an opportunity for a sub 1300 level to shake out all the $1,300 bulls. And I've been looking for this area for weeks, maybe months now, back down to 1286, which is 61.8 back here. And some type of wedge might be setting up, and this could be the bottom wedge line. Everyone with me on that? Dan's thinking 1290. Dan's a great trader, so that's very possible. Okay, so let's get back to the Dixie. The yen may fail from here. Okay, I'd be more bearish if this high had taken out this high, but it didn't. So there's a ton of buy stops above here. But, you know, there is a chance for it to, you know, peel back towards 108, maybe even 107.50, depending upon how deep this market is. Plus, some people are looking for risk off in the S&Ps from this 2740 area. So that's my look there, as at the end could come off. As far as critical levels in the euro, we're already at one here. This was the flag line that we took out. Getting back inside this formation, I think, would be pretty constructive. So we'll see if that happens. And, you know, 21 should be pretty doable, maybe even 22. So this is a pretty important area based upon if you consider this a breakdown or an acceleration of a downtrend. For the euro to get back inside this range, I think would be pretty constructive. And just want to give you a quick update in EG, because you can move up your stops on that if you've been trading it. So right now it's up a little bit. And as you can tell, this is a nice flagpole. This was the area that I was suggesting, and with some of the Eagles, we got long at this 87.30 level. So it still is possible that this could turn out to be some type of bull flag. Could it just keep going from here? Yes. But I'd be looking at any pullbacks this week towards 87.80-ish as a possible buy point. You're wrong under the 30 level. Okay, and this is the flagpole. So eventually, if we break out over this area, you're talking 100 pips or so that could take you up to the above the 89 level. And, you know, there's a ton of stops up here, you know, all the way up here. So I'd say your first level of stops would be up here at 88.42. People that thought they had the top again, they're being threatened. So those are some of my views. Any questions on things that I covered so far? There's other things to talk about. We have a great guest today, Peter Bookvar. Okay, so Peter's a inflation bull, likes the gold. Last time he was on, I talked about, well, what would cause the dollar to go up, and the dollar did go up, so it's going to be interesting to see what his take is. I'm guessing he's still bearish the dollar and probably considers this a great buying opportunity. I'm also going to ask him about Bullard's statement that was made last week that the Fed doesn't need to hike anymore. So we'll see what Peter says. He's a great Fed watcher. And now I'm going to turn it over to not a watcher, but a player. Blake Morrow, the player.
Good morning.
Hey, buddy.
How are you?
I'm good. How are you doing this morning, buddy?
I'm doing good. We had a lot of fun with Mother's Day yesterday, and happy Mother's Day to all you ladies out there that are moms. I know we had a really good day yesterday. We spent the morning with the family, and then yesterday evening we went out to, whoops, wrong one, hold on, wrong screen. Hold on, trying to get over to this. Sorry, I'm screwing up the screens here. There we go. Okay. So we were what was I saying? Oh yeah, we had a great Mother's Day. I hope your wife had a great Mother's Day, and we had a good Mother's Day. Last night we went out to there's in Scottsdale here, they do concert in the park, and they had a cover band, which you would have probably appreciated, and it was this local band that has been doing cover band music for years. I remember seeing them when I was single in bars. You know, they
Ruby and the Red Hots.
here they call themselves the Rock Lobsters, and they're great. They're a great local cover band and very popular. And I mean, there was a lot of people at the park last night, but we hung out with friends on the on the lawn, and kids ran around like crazy, and it was great. The only problem is it's kind of late for me, for my taste. So I'll probably be paying the piper a little bit later today. I'll probably be a little tired, but other than that, we had, my wife had a great day, and that was the most important thing for Mother's Day yesterday, and so it was good. I hope everybody had a good weekend as well. As you'd mentioned, we are seeing some dollar weakness, and if you look at the euro dollar, we've got this, inverted head and shoulder pattern playing itself out. It looks like we could get back up towards 120.80, 121 level. And remember, this is huge. I mean, you think about this 121 level. This is a major breakout point for the currency, and it was a big support on the way down. It's going to be a big resistance on the way back up should we get there. All right. But I don't know if I was, and I'm not trading the euro dollar, if I was short the euro dollar, I would be expecting that we might, make our way back up towards this level here. So, which isn't too terribly far away. I mean, you're talking about another 100 pips from where we're at, but I think you've got to be expecting that type of move in the euro dollar. I think that a lot of the dollar buying that we've seen over the last couple of weeks is going to continue to pare back a little bit, and might allow for that euro dollar to ratchet up a little further. I mean, you look at the cable. Well, the cable's pushing right into resistance, and I'll tell you, Dale, this the cable dollar is one of those that if we start breaching 136 and a quarter, it might squeeze. And I know I mentioned this last week, and I'll mention it again. This squeeze, I don't expect it to last too long, but a move up here could take us back to 137 and before heading back down again. And frankly, I personally would love to be short the cable up at 137 if we get up there. I'm trying to do this without mangling these fibs here. There we go.
Yeah, I like the scenario.
Yeah, I mean, keep in mind the pound's got a big double top up there, and false breakout at the highs, big double top. So any move to 137, and I personally, I'm a seller. I just hope we can make our way up there. Excuse me, sorry, I didn't mean to yawn on you guys, but that's what I'm thinking. And the Aussie dollar, still this is a multi-year trend line that was broken. Well, I guess 2016, yeah. So multi-year trend line, multi-month trend line. That if we can rally back up to 76 and some change, I think the Aussie will be a short up there. The Kiwi has been trading extremely heavy, but still I think the risk is that we can bounce a little bit before rolling back over again. The dollar Canadian still is trading pretty heavy, but we have all this NAFTA news, and I drew this out on Friday, and you can see exactly what happened is, we rallied to 128 and came back down again. So technically that made a lot of sense, but there's the NAFTA negotiation. I don't want to say it's a deadline. It's kind of like a soft deadline of the 17th, which is actually Thursday. So the negotiations are still ongoing, and frankly, they're not looking promising, which that doesn't mean that I'm going to buy the dollar Canadian or I'm buying the dollar Canadian because they're not looking promising. But if they continue to stretch this out further, then this week the dollar Canadian might be at risk of having a false breakout up here, and then performing another false breakdown down here, and we might rally back up towards 129 and beyond 130. I mean, it's entirely possible. I'm staying bearish the dollar Canadian while below 128, and but you have to imagine that we get back above 128 and then we can start squeezing again. So but that really is all NAFTA related, nothing else, nothing more. Despite the weak employment employment report we saw out of Canada on Friday, which pushed us back up towards 128, the dollar Canadian is still trading heavy, despite that, and meaning the Canadian currency is a little bit stronger. But like I said, if things go sideways with the NAFTA negotiations, we can pop right back above 128, no problem. But I shorted it on Friday at like 128, 127.90 something, and then I closed it at like 127.80, and I just made a quick 12 pips because I knew it was going to come back up here. Well, I thought it was going to reject at 128 and come back down, which it did. I made a little bit, and then I've kind of left it alone, but I wouldn't mind reestablishing my short position. And we do have, I still have a pattern in play for the dollar Canadian as a bearish position. I have taken that trade twice since issuing that pattern in play as well, and made money both times on the short side of the Canadian. So and I still plan on playing it that way unless proven otherwise, which means as long as we stay below 128, I still plan on establishing shorts. And it's been a terribly slow start to the week, despite the dollar, the dollar being a little weak, against the euro and the pound. But it's been kind of slow, almost like the market's almost trading like a holiday. But the dollar yen has bounced a little bit with bond yields are coming up, so the dollar yen is bouncing back towards the 110. Remember, we still have the potential for a double top up here, but we really need to get below at this point 109.15, but really below like 108.60 and 108.80 before the dollar Canadian, or the dollar yen looks bearish. Now, you were talking a little bit about gold and silver earlier this session, Dale, and you still think that precious metals might come down a little bit. Is that correct? Dale might have stepped away, but I think that's what Dale was saying. He's expecting that some of the precious metals might come off a little bit. I still look fairly constructive with gold and silver. I have to mention that gold is holding above this really key support level. Silver is too, but we're very much mid-range. I think if the dollar continues to pull back, it's gonna lift these precious metals. But again, it's so quiet out there, and I think the real driver in this market right now is probably going to continue to be the bond market. The bond market, if you see bonds, we are still trading really heavy, but we've got to watch for bonds if they hit new lows. If they hit new lows, that means the dollar's, the dollar's probably going to rally, as yields go up, and yields are still, you look at the 10-year, we're not too far off at 3% still. So yields are still pretty strong. Or the flip side is if the bond market starts to rally and we start to see that squeeze, then the dollar might suffer as a result. So I'm keeping an eye on the bond market because I think that's going to be the bigger driver, at least for the week. We do have a couple key economic data points that are being released this week. For the U.S., we have retail sales tomorrow, so we might have to wait tomorrow to get a little bit of a jolt from economic data, but we have tomorrow's retail sales, and then on Wednesday we have some housing data, I believe, on Wednesday, but I know we have industrial production and capacity utilization, which will be, you know, some of the bigger pieces of data that really allow for GDP for us to get a better picture on what we're going to be looking at as far as GDP goes. Let me see. You know, going back to the euro dollar, there is, again, the euro. I don't necessarily want to be long at this point, but what I wouldn't mind doing, if given the opportunity today, if we can see a pullback in the euro dollar to like 109.50, that's where I'd prefer to be long. I don't necessarily want to be long at current levels. I probably would like to be long on a dip, because I just don't want to chase this euro dollar higher today. Not sure if we're going to get it, but again, it's kind of what I'm looking at. Oh, one other currency pair that I think I should mention before I pass it over to Steve here in a few minutes is I should mention the Swissy. So the Swissy, we'd been talking about a move back down in the Swissy, and one of the bigger risks over here, is that we had this break above 1.0040, and it was a very slight break, but we're starting to roll over again, and that is what might give us that, you know, this move back down below 99 cents, and we get a move back down towards 98.50, and then, you know, as I've been pointing out the last couple of days, I'm expecting, you know, to be able to buy down here at 98.50. I think that's going to be more of a gift if we can get down here to buy the dollar Swiss, and personally, that's where I'd like to be long if given the opportunity. Not sure if we're going to get it, but you know, that's what I'm thinking as of right now with the Swissy. One of the currency pairs that have, and I don't want to steal too much of Steve's thunder here, but one of the other things that I can't believe is this Aussie New Zealand continues just to rally higher, and I'm so bummed out that I'm not being able to capitalize on this move. It's just continuing to scream higher, and hopefully, you know, being as overbought as it is, it does allow for a bit of a pullback, to give us an opportunity to get long again. So anyway, hey, Dale, if you're back, I wanted to ask you about, hey Dale, so about precious metals. So where do you see gold going at this point? Because, you know, I still see gold as being very range bound at this point.
Yeah, I'm looking for that 61.8 level, although I wouldn't rule out one more push up towards your moving average here, and then one more shot down, and a lot of it is, I didn't like the candle we bottomed on at 1300 last time. It was a negative candle, and we just bounced from there, so I think this is not the launching point. So I like your trend line there. I'm looking for one more low in US dollar yuan. And, you know, I'm just thinking also about that maybe Trump gets a peace deal and people will also sell off gold. And I'd love to buy gold on a peace deal. So I'm thinking 1285. I'm thinking 1228 and then 1285. And then I think we make the move up towards a breakout.
So, you know, if we get a dip below this support, I think I could agree with you wholeheartedly that that's probably the place that you want to be a buyer, is down here at the 1280 level. Yeah, if we get that opportunity, I guess the question is, do we get it or not?
It probably would imply this dollar rally that's taken a breather has another push up towards 94-ish or something too. So
yeah, okay.
Maybe we need that.
I hear what you're saying, and you know, looking at, and speaking of which, I didn't look at the dollar index, which I probably should for everybody here, because the dollar is almost in no man's land for me. You know, I personally would love to see the dollar push back towards 91. I mean, it'd be great to see the dollar index, push all the way back down here to give us an opportunity to be on the long side. I don't know if we're going to get that big of a dip. I just
Yeah,
don't.
I'm thinking, remember 92 was a big number for us. We thought it was going to stop there. It accelerated through it. So I'm kind of thinking 92 is kind of the line in the sand for either a continuation up, or if we take out 92, then you could get that level, Blake.
Yeah. I mean, we got the 200-day moving average is just below 92, which could offer some support as well. So, and I know you stepped away from the mic for a few minutes, and I think the right now we've got to wait on retail sales tomorrow, industrial production on Wednesday, and capacity utilization, and I guess probably have to be patient here, and I'm not overly excited about doing much, especially knowing that the NAFTA agreement or NAFTA negotiations are ongoing, that we might get some sort of resolution on Thursday, possibly Friday, knowing there's key economic data the next couple of days. Today is one of those days that I'm not overly excited about doing much, actually, and it's okay. It's okay, not to do anything as well. I want to make sure that everybody understands that you don't have to be immersed in the markets at every moment in a trade. Right now it's kind of, we are in a bit of no man's land. So, and hopefully Steve's got some better ideas out there. Steve, are you here?
Hey, Blake.
Hey, good morning,
Good morning.
Steve. So,
have a nice week.
Yeah, have you had a good weekend?
Oh, the best. Wife sick.
Wife was sick. Son was throwing up. Awesome, huh?
Yeah, things like that. Awesome.
I'm gonna give you a recommendation. I think you should stick to just having one kid. Just kidding. But yeah,
it's not a bad recommendation, but I'm not that smart, I think.
Well, speaking of which, I should probably mention tonight I'm not going to be around. Our son won their playoff game on Saturday. It was an intense game. They beat the pants off of this team that thought they were going to walk away with the championship.
See, Blake, I said they could play up to their competition level. You said they were great, and I said, well, they'll play great because they're playing a great team.
Yeah, they played great because they had nothing to lose, and the other team thought they were going to walk away with the championship. So now
love the underdog.
Yeah, now it's the tide has turned, and what looked like was going to be a sure win for the other team, they're questioning themselves. So the playoff game is tonight. So I'll be out late tonight at the ballpark. So
yeah, trading.
I will be, and I can guarantee you, if the dollar yen breaks 109, I'll be adding to short positions. So
around the third inning, inning,
could be the third inning or so. Anyway, all right. Well, Steve, I hope you have some ideas out here, especially with some of the crosses, because the dollars, as I mentioned, is a little bit of it's a little tricky here. I don't want to necessarily be long the euro at this point. I don't want to be short. I'm looking to buy dips, but I don't know if we're going to get a dip. So it's a little tricky here with the dollar.
No, I'm 100% with you. We said since last week when we had the first day that dollars seemed to be stalling, that we might see some dollars, some days of dollar being weaker, and I do think that this hasn't stopped playing out yet. I'm 100% with you on the fact that we should see some more weakness before reestablishing some dollar strength. Now, obviously, as you are, I'm not really convinced that this is going to be a long-term deal. I mean, reestablishing dollar strength, I don't think that's going to be like the theme of the year. But we have to see how much it's going to play out. We do have, though, I do have some, some things I'm looking at, though. So, we have things to talk about, as always.
Good. All right. Well, you guys have a great trading session. Have a great interview with Peter, Dale, and
that's going to be good.
We'll see you guys tomorrow.
Okay. Good luck, Blake.
Thanks, guys.
See you in the chat room, Blake. Bye-bye, mate.
Hi, Steve.
Hey, Coach.
How are you?
Are you ready? I'm good. I'm good. A little bit of a rough weekend, but other than that, I'm good.
Dan Norberg's looking to sell Euro Yen up to 132. Dan's a pretty good trader.
I'm more or less with him. I'm actually looking at. I said it I think on Friday as well that 131.50, 131.60, quite a nice area. You can see it here.
Yeah.
So even if we fib this, probably we are also going to get some kind of a fib in there. Let's see what it is. It's a 61.8, perfectly aligned.
Okay.
You see it?
All right. Yeah.
It's at 131.86. It's at the top of this zone. So I do think that anywhere between the high of the day that we already seen, which was also, by the way, that was a 50% fib. It was also the 50 daily moving average to 131.85. Okay, you want to extend it a little bit and say 132. I think that's going to be a tough area to crack. I still have a little bit of my short left. I booked the rest of it, so I do still have some exposure. If I do see the pair stalling up there, I might actually consider, increasing my position once again. So I do agree that that's an interesting area to watch.
That's a massive formation, Steve. Massive formation. I mean, if you go all the way back to like last summer, you almost have like a head and shoulders top or a descending triangle, which measures from the high 37.
Oh yeah, definitely. It would take us a lot lower.
118.
Yeah, it would take us a lot lower. But one thing is for sure, 129 is a major level, and we do need to see it break in order for us to start being a lot more aggressive in seeking downside targets, right?
Right. Definitely.
So Blake already showed Euro USD. I have no objections to his targets. I remind you that we were looking for a high here in the USD Swiss, and we had this conversation earlier in the chat room. I still believe that there is a potential that we have more downside here. I don't see any reason why we can't even go back and retest this confluence of supports at 98.50. So I do think that USD Swiss has a decent chance of paring back more of the gains. I mean, this has been an incredible run higher. So I don't think it should be done and over with within 3 days lower. Nothing is impossible, obviously. This was a strong move, but my intuition tells me that we should move somewhat lower before higher. Now we are seeing that the cable is obviously a lot weaker. I mean, it hasn't even managed to break above the 136.20 area. But if we do break higher, and I've said it multiple times, between 137 and 138, I think that area will be a very, very strong area of resistance. I will be building a position, and I'm looking to be short as well. If you remember, we were discussing that since last week. I heard Blake said the same, so no denying that. I think that the cable is a good candidate, and I'm going to also show you the gappy before I actually have a look at platinum, because you talked about the metals, but I think that the platinum has a very interesting formation. Anyhow, let's go to the gappy first, and here it is. I need to reiterate here that this is a very, very critical zone that the pair has been barely holding, right? It's a 50% fib of the last move higher. It's this ascending trend line support from this, you can call it a wedge. So I do think that holding this is obviously so far a victory for the bulls. But in any case, I'm not seeing something that inspires me and makes me being afraid that the bearish case is done and over with. On the contrary, I do think that up to 150.50, any type of rejection we get there, I think it's going to be a good opportunity to try being short once again. And in any case, I do think that when we manage to break below 147, we will see some nice extension to the downside. So what I want to say about platinum is that, as you can see here, platinum has a descending wedge. Nobody tells us, of course, we also see some RSI divergence. Nobody says that we can't push lower once again, but at some point, if we do break above this descending wedge, I think that platinum has the potential of squeezing shorts. Obviously, no need to look at gold and silver because nothing has changed since last week. We remain within their equivalent formations. Both gold is here within the triangle. Silver, same deal, even a more prolonged consolidation actually. Platinum, on the other hand, is testing again the 1000 level, kind of mixed. This might be a consolidation in time now. And copper still holds within this very slow drift to the downside, but in any case, as long as we remain above 294, I think that we need to respect the upside. Okay, so this is what my view on the metals. Now, having to do with the USD yen, nothing much has changed. I mean, USD yen is holding here. We're holding this ascending channel. The more we oscillate here without breaking to the downside, the higher the chances that there is one more leg to the upside left. So the more we correct in time in this little formation, the higher the chances that we're going to break up for perhaps one more push towards 111 or the 61.8, which is a little bit lower than 111, or a little bit higher. We have a support resistance area at 111.50. So I have to tell you that since we haven't managed to break down already from here, I would, I cautiously remain bullish, but just in the near term, right? So that's my view here. Now, having to do with bonds, I mean, we've examined multiple times the scenario that bonds, since positioning is quite extreme, might squeeze people out and produce some kind of a bigger rebound. But this is all in theory, because what we've seen in practice is that bonds keep breaking one level after the other. They keep producing some type of consolidations after they do so, and then they resume to the downside. And if you see so far the 10-year, at least, I mean the treasury, the structure in no way indicates that some kind of a big rebound is imminent. Quite the opposite. So I'm not seeing any real evidence of a rebound here. And in any case, as long as we remain below 120.13, I don't think that somebody can make, from a technical perspective at least, intuition is a different story, but from a technical perspective, I don't think anybody can make a bullish case. Now, having to do with the bunds have been moving lower within this channel, but I do admit that bunds are a lot less forward than the treasuries, because if you see, the bunds have now spent a significant amount of time, roughly since the beginning of 2016, that are correcting lower in a formation that is definitely not bearish. I mean, it is a corrective formation, there is no question about it, but so far it has failed to produce some type of a big bearish break. So it can have us question the overall direction of the trend, right? I mean, if I zoom out, you can clearly see here that the trend was for multiple years higher, and this just looks like a prolonged consolidation slash correction. So I would have to say, I was looking forward to the bunds breaking lower, breaking down, but once we held this and we rebounded, significantly higher, I stopped paying so much attention. I will start paying attention once again if we actually do break below or above this long-term triangle. Okay, until then, I think that the treasuries are, quite easier to read. So let me see if I had something else in mind. Yeah, S&P, clearly broke and closed above this triangle on a weekly basis as well. I do think that this increases by a lot of chances that we're going to see higher prices from here. It's not slam dunk. It's not 100% sure yet, because this can still be in the confines of a correction in time, because somebody can say that we haven't broken above this high, so it can still be some kind of a choppy correction here that will play out something like this or even lower. But having broken above here definitely tilts the chances towards a bullish continuation. Still, though, it's not like a very clear technical point of view, so I can, with conviction, advocate that we're headed higher. So I would still caution. I still think that taking long positions should be done in moderation and with very, very careful risk management. Okay, now to confirm that, Nasdaq more or less the same deal. IWM closed the week right on a very significant, critical actually resistance, just below the highs as well. So I have to say that between these US indexes, I think that IWM looks by far the best. Even the RSI, if you see here, is actually breaking to the upside. So I do think that between those, the IWM looks somewhat better.
The IWM smelled the dollar rally like a month or so ago, because it always acts better with dollar strength.
That's a good point. That's a good point, actually. Yes.
Yeah, so I mean, it's going to be hard to get bearish Russell until we have a resumption of the downtrend in the dollar. And in my view, the second strongest chart, not quite as strong, would be the NASDAQ 100, Steve. That still Absolutely. Has a chance for a third drive to a top, or maybe Grega would call that an ending diagonal if we get up there. And that's a chart I want to show on
like
TFNN. Yeah. Then you get 1.618.
Yeah, perhaps retesting once again this trend line up there.
Yeah.
Absolutely. It can definitely.
But it's or I know a guy who's pretty good. I interviewed him. God, what's his name? He does pivot points. Jeff York. He's thinking that we could get a right shoulder here at 69.90, which is where we're at right now.
And then, in essence, craft like this kind of a head and shoulders formation here.
Yeah.
And then break lower from there. Yeah.
So it's either or. Both are bearish.
Your point of view of a possible ascending wedge is also valid, because perhaps this is not a channel, and perhaps what we would be looking for is, in this case, something like this.
Like a wedge. Yeah,
something like this.
Would that be an ending diagonal up there? Yeah. Okay.
Sure. I mean, this is an ascending wedge if it plays out like that. So yeah, sure, absolutely.
Okay. That's my, I guess, not being an Elliotician, my preferred count.
Yeah, absolutely. I mean,
for a while.
It can be.
Yeah.
It can be. But one thing is for sure is, it's absolutely okay not to be 100% sure. I mean, so, people that listen often to this webinar, they know that many times Blake, I, and whoever else is speaking, we speak with very high conviction. So, for example, if you remember, when we actually broke down in the indices and when we actually posted that double bottom here in the SPX, if you remember, I said with absolute conviction that, even if this is the low, there is absolutely no chance that the index would post new highs for many, many weeks to come. I mean,
I remember it. You forecasted a large consolidation pattern developing.
Yeah. And unfortunately,
you know what's interesting though? The Russell's going to make a new high. The Nasdaq, even if it gets up to that third drive, I don't think the S&Ps or the Dow make a new high with those indexes. I'm not sure what it means, but I don't think they will.
If that's the case, that will be a very interesting divergence to monitor, a very interesting divergence to monitor, and
Okay.
definitely it will be a better sign, definitely,
Okay.
if that proves to be the case. But unfortunately, yeah, I predicted that the bullish scenario is that we will get a prolonged consolidation. Unfortunately, as I said, the problem with consolidations is that you can never be very sure when they're over. So in retrospect, for example, if we move forward a few weeks and we're trading like somewhere up there, we will then be able to say with certainty, okay, that was the end of the consolidation down here, and that was the first leg higher. But unfortunately, we cannot be sure yet. I mean, the fact that we've broken above this descending trend line, yeah, okay, I count it. But does that make it a slam dunk case, a sealed case that, that was it? No, it doesn't. I mean, we can fail anywhere from here, between here and 2,800, this high, and it would still keep us within a choppy consolidation, right? That's
Yes.
why I'm saying that it's okay to say on occasion that, listen, this technical structure is not clear 100%. So you would either trade something else, or if you want to jump the gun, as I tried to do a couple of times, manage your risk very carefully, very closely. So if you're wrong, you either lose very little or you get stopped out at break even, like it happened with me, for example. And in this case, you don't let a trade run away from you. Because, for example, if I go all in because we broke above there, and this ends up being just another part of a choppy consolidation, and we do something like that, and then we break lower, and we finally end up getting one more leg to the downside for an ABC, for example, then you will find yourself out of the money by quite a lot. I mean, and you'll be in trouble. So since we're not sure yet, very, very careful risk management is absolutely necessary. Not that I'm implying that risk management shouldn't be a first priority in any case, but in this case, it should be even more careful than usually. So that's the case with indices. I mean, we remain a little bit cautious. One thing is for sure: the FTSE, given the pound weakness, has been a beast. I mean, this is almost a 13% recovery within like a 30 trading days. At some point, we should see some type of a pullback. But in any case, I do believe that the FTSE is obviously one of the indexes that you should expect to produce new highs. I don't know if we're going to correct lower towards this area here, 7,600, or a little bit lower. But in any case, I would be looking to buy this dip because this is the definition of V-shaped recovery. Not exactly the same applies to DAX, but DAX has been decently strong as well. I think the FTSE though is by far the preferred one among the indices I'm currently monitoring. Anyhow, we have some questions from our friends, so let's go through them and we'll get more inspiration. I'm sorting AJ. Okay, let's have a look at AJ. That might not be a bad idea. I see two scenarios here having to do with Oz again. Scenario one, this was a bear flag. We broke below it. We're coming up, perhaps retesting this broken flag, and then resuming to the downside. Now, that's not the only scenario, though. There is, for example, a scenario that this is not going to be such an easy thing to trade because that might prove to be a triangle. Right? You can see it here. So if this proves to be a triangle, it can do something like this, perhaps even move lower, perhaps higher again, and then end up breaking to the downside. So keep that in mind, that there is an alternative interpretation, and that's the interpretation of a triangle. Now for our chart, I have a wave 5. If the 5 AM bar closes below, what's your thoughts? Okay, Dow Jones for our chart. Let's have a look at it. There we go, Dow Jones for our. Yes, it can be, but I do see alternative interpretations as well. I think even from an Elliott wave perspective, that's still not 100% clear. Not 100% clear. So, any way I look at it, I do think, that it's a good idea attempting to buy a dip and then being very careful, because there is a slightly higher chance that we're going to resume to the upside, but definitely I wouldn't be buying right here, right now. Okay, so yeah, definitely a pullback. So if that's the case, we should expect to see a pullback to former wave, the end of former wave 3 or beginning of wave 4, and take it from there. Hi Steve, can you have a look at the USDMXN with a bad mood in several EM currencies due to the sell-off with the Argentinian peso and upcoming elections? It seems to me that USDMXN is a buy in any dip. Listen, in any case, I don't disagree that USDMXN has definitely managed to crack this trend line resistance, and this is something I do pay attention to, right? You can see it here, this trend line resistance. So I do believe this is what we drew several days ago, that any pullback lower should probably find buyers, and actually it happened earlier than expected. As you see on Friday, we had a piercing line, a candlestick, a piercing line. So I do agree with you. I think that until proven otherwise, buying the dip might prove the way to go. I mean, why not another push towards the 1990 area? As long as we remain above this broken trend line, I think it's worth it.
Steve.
Yes, Telio?
Hello. Hi, everybody. Just wanted to say, I think I read the headline earlier today, if I'm not mistaken, that the current Mexican president is polling something like 20 points ahead of the competition. So the elections are coming up, but it seems that it's not going to be particularly close. That's what I read. I need to recheck it, but I'm sure I read that headline earlier today. Also, I wanted to ask, I missed the second half of Blake's part because I was out. Did he talk about the euro at all, or did you go through the euro? I just wanted to mention
Blake did go through the Euro USD. Yes.
Okay. I just wanted to point out the developments in Italy. I don't know if you talked about that. So
no, go ahead, and actually thank you for reminding me. As it seems, we are getting finally a resolution with a very weird coalition, right, Stelio?
Yes, and it looks like what we said when we wrote the blog post, remember, before the elections, we said that the worst case scenario would be a coalition between the 5-star movement and somebody like the Lega Nord,
which is exactly what's happening in this case.
Yes, and it looks like they will be forming a government. Now they're talking about who to appoint for prime minister, and they're actually
so far the only thing for sure is that they've said that the candidate, I mean the one that they will propose for prime minister, will actually be a politician and not a technocrat.
Yes,
that's what they've said.
And they've also ruled out the two leaders of the two parties being prime minister, which is interesting. But they've thrown some trial balloons today to see what happens. There's been some rumors here and there. Bottom line is they're going to form a government. They're going to pick a prime minister. And it's interesting because, okay, I'm not an expert in Italian politics, but I read a few things that they're talking about. And some of the things that they have announced are very interesting. Like, for example, they're saying they're going to apply a 15% flat tax rate, which I think any country that does that is only going to be good for the economy. But very difficult.
But from what I saw, that was the proposition from the 5-star movement. But yes. There is pushback on the Lega party because they think that at least in the short term, it's not going to be sustainable. As a fiscal policy in the short term, because as you said, I'm 100% in agreement with you that in the medium to long term, such a policy would definitely produce good results for the economy. But as it seems, this is the proposition, but it's not 100% sure that they will manage to achieve something. What I did pay attention to, though, and I think it's very interesting, is that among the qualities, in essence, or anyhow the requirements from the politician that they will select to serve as prime minister, they've both agreed is that it should be a person that will be like well accepted and recognized, like in globally, like a known person or somebody that's that has decent credentials, that will be a person that will be able to actually transfer Italy's Euroscepticism in a proper manner. And, you know, that's a little bit of a red flag, right?
Yeah. And the other thing, the thing which I was about to say was that I agree with you 100%. And also, you know, they're talking about 15% flat tax rate. You know, this is not Switzerland or Sweden, you know, where they can implement things like that. It's Italy. It's a very difficult to change things from the status quo. You know, a very complicated tax regime to that. But the other thing, which really I read and it kind of scared me a little bit, is that they're proposing having a parallel currency, which will be used for paying taxes. So that, you know, I didn't read all the details about it, but when I read the headline, I thought, oh my God.
Any of them happens to be friend of Varoufakis?
Yeah. I don't know, man. I don't know. But really, I read that and I said it to myself, oh no, this is not good. So
yeah,
you know,
that doesn't sound good.
But you know, markets don't care. You know, the euro is up against the dollar today, and a little bit against sterling, a little bit against everything. So the market just seems to think that, yeah, they're going to get through it somehow. They'll find a way. You know, I'm not so sure.
Isn't that what France did a long time ago, guys? They had a two-tier currency system, and one was really used for international payments. One was domestic, and maybe they're calling that this currency would be for paying taxes, but maybe it's a domestic currency.
Could be. I don't actually remember that in France. Must have been many decades ago.
In any case, given the nature and the positions of those two parties, Dale, when such two parties propose a parallel currency for no matter for what kind of use they will claim it is, everybody is going to be having at the back of their minds that, you know, this is also like a test run, you know. For plan B, you know what I mean?
Yeah.
So in any case, I think that if they actually get to the point that they propose and they actually start implementing something like that, the market will pay attention and the market will care. That's what I think.
Yeah, I agree. I was personally quite.
So as long as it's just an idea that they've thrown out there, yeah, the market won't care at all. But you know, once they put it down, if that happens and they actually start implementing it, the market will start paying attention. That's my prediction.
Yeah, no, that's a fair point. But anyway, those are my thoughts on Italy.
Yeah,
you know,
thank you for reminding me, actually, because you're right. This is important to say and discuss, because you know, many people here are not paying attention to you know, political developments, but at some point they do matter, and when they start mattering, they matter a lot. You know what I mean? The market many times like ignores fundamental and macro stuff, and one day something happens and the market starts discounting every single one of those facts that it was ignoring for X amount of time.
Yeah, it's like a switch. You get to a point, exactly, and suddenly it's on. Yeah.
Exactly. It's like a switch, and it's very binary, isn't it?
Yeah.
0 or 1. Yeah. Okay. Dale is your guest here, by the way.
Yes, he is.
Actually, Steve, Olivier is saying that what I said about Mexico is not right. Okay, I'll need to double check, because I'm sure I read that headline. Maybe I misread something. So sorry about that. I will double check.
Let us know tomorrow, Celia.
Yes.
Okay, Dale, enjoy the interview. Peter is a great guest, so I really propose that, you know, people should stick and, you know, listen to him.
Okay, thank you, Steve, for your analysis. And I'm Peter. I see you in the house, and want to thank you for coming back. I'm going to make you a panelist, because you usually don't bring charts to show, and then I'm going to make myself the presenter. So I could show your website. How are you, buddy?
How you doing?
Good. I'm doing fine, Peter. It's great to have you back. In fact, I want to talk about a few markets since the last time we talked. I know that you're a dollar bear, okay? And I remember our last conversation, I said, well, you know, I know some people that are looking for a 117 euro or so, and what do you think could create this kind of drop? A lot of people are pointing towards it was just too crowded of a trade. Commitment of traders was very extreme long positions in euro. What's your assessment of what's going on here with the euro coming down from 125 to say 118.5? And is your view still the same on the dollar, that this might be a great dollar shorting opportunity?
Well, it's certainly I think a deserved contra trend bounce. Everyone hated the dollar, and then you had some not necessarily dovish, but people realizing that the Bank of England didn't raise rates, and the ECB is still going to drag their feet, and who knows when the Bank of Japan may change things. And then, of course, everything happening with emerging markets, with Argentina and Turkey, Indonesia. And that also obviously helped the dollar. At the same time, everyone's realizing, the Fed will just keep on going. The most interesting thing today is comments from ECB member Villeroy, who is the head of the Bank of France and an ECB governing council member, who reminded everybody that QE is going to be over by the end of the year, whether it's September or December. And the question of when to start getting rid of negative interest rates, he said, will happen in soon after the end QE, and not in quarters, not years, he said. And we're seeing and you add in the decision in Italy that looks like the League and the Five-Star Movement have finally formed a government, and they are intent on blowing out the deficit through minimum income, lowering the retirement age, and putting in a 15% flat tax. The Italian 2-year yield today, on Friday, closed at minus 28 basis points. It is up 14.5 basis points today to minus 12. That is an extraordinary spike in short-term Italian interest rates. So the euro also is jumping back above 120 here. So I've been talking about a problem coming in European bonds for a while, and it looks like today was a major wake-up call for those people who are buying negative yielding paper, thinking they're going to flip it to some other idiot at a higher price.
Okay, so interesting. They're also floating an idea we were talking about earlier, Peter, of having a second currency in Italy, one for paying taxes. Any comment on that? And I was bringing up the last two-tier. I'm old enough to remember it, even though I wasn't trading it. The last two-tier currency system I remember was in France, and it was like they had one for domestic use that they continued to debase, and they had another one for international payments and settlements. Do you think Italy is really going to go this way with another currency?
I mean, I get, you have some rebellious politicians in Five-Star Movement who propose stuff like this, and I think it was hard enough getting the euro in place. I can't imagine them being successful in putting this in place. So I think it's more just jabber and talk and rebellious type behavior rather than anything that will come to fruition.
Well, I'm trying to think of what is going to weaken the dollar, of any fresh news or anything, and actually something popped up last week. What was your reaction to Bullard's comments that the Fed may not have to hike anymore the rest of the year? Is he floating a trial balloon, or it's not his Fed, but what do you think of that?
No, I mean, it's not new from what he said. He's alluded to this in the past. I mean, he still believes in negative interest rates, and so I'm not surprised to hear this from Bullard. He's an extreme dove. It was years ago when the market had a little correction, and he's like, oh, maybe we shouldn't end QE. So this guy's a dove, and I think he just reiterated his stance.
Okay. So what do you think is going to be the catalyst for a lower dollar then? Could it be?
I think it's really the blowing out of U.S. debts and deficits. It's an administration that wants a weaker dollar. I think people will realize that while the Fed is certainly tightening, the pace is so slow that don't look at that as necessarily dollar supportive. Inflation numbers are moving up higher here than they are in most other places, particularly versus Europe and Japan, and higher inflation is not good for one's currency. So while the Fed is raising rates, they're still lagging behind this rise in inflation, and we still have negative real interest rates, with the CPI now printing about 2% now, at least at the core level, and the Fed funds rate at 1.625. So that's not really a good support for one's currency.
Okay, so basically, people will realize the con in confidence.
Yeah,
as they lose it, as they lose confidence with Fed policy, and
yeah, and we also have
it
to
being able
understand
to
that,
keep up with inflation.
yes, and also at some point, the Fed tightening will lead to an economic slowdown in the U.S., which will then end the Fed tightening, then lead to Fed cuts, and then that certainly will be very negative for the dollar.
Okay. You made a great call near the end of the interview. Are you surprised I remember everything you say in your interviews months ago?
Thank you, Dale.
Anyway, you said, you know, I took a look at the silver chart and it looked pretty good. And the next day we had this big spike. I called it the bookvar spike, you know, like the Markings bottom. Since then we've pulled back, and the gold silver ratio is starting to come in. I don't know if you have a comment on that, whether or not you think silver could outperform gold. Do you have a take on that?
Yeah, I mean, I think it will. I mean, watching gold and silver is still very maddening if you're positive on it. But when you look at this dollar bounce that we've had, and that gold is still 13.20, silver continues to trade very well in the face of this dollar bounce, and commodities generally trade very well in the face of this dollar bounce. I think that's a good sign for these metals, that when the dollar does resume its weakness, which I expect it to do, as I stated, that will be a nice boost to these metals, and silver always will give you a little bit of an extra kicker.
Haven't we also, Peter, though, gone through periods where gold could rally with a stable to strong dollar? And what's the catalyst for that? I mean, I have seen it where, wasn't it in the late 70s or during the late 80s that rates were going up and gold and the dollar were going down?
Well, some of the best gold rallies, some of the best gold rallies occurred with rising interest rates.
That's what I mean.
In the late 70s. Yeah, in the late 70s, and look at the mid 2000s. The Fed raised the Fed funds rate from 1. By the time they got to above 4%, and the Fed funds rate, gold had already doubled. So if you were shorting gold because you said the Fed's raising interest rates, well, that was a bad trade. So again, you got to really look at real interest rates as a better gauge rather than the nominal level.
Okay, I want to talk a little bit about this because, you know, I learn a lot from you every time I interview you. I do this under the guise that I'm edifying our community, but my selfish reason is it's intelligence gathering for me. And interviewed Chris Carolyn of the Spiral Calendar, and he said that he has found a pretty tight correlation between the US dollar, yuan, and gold. Have you noticed anything? Do you follow the Chinese currency at all in any way?
Yeah, I follow it closely. I do.
What do you think? What do you think of that possible connection between the yuan and gold? And this might imply one more shakeout in gold under 1300 if the yuan makes a new low.
I mean, I think at times there's a correlation. There's times that there's not.
Yeah.
I don't think there's any long-term real correlation of note for me to put my finger on. So, yeah, at times that these correlations do work, and there are times they don't. So, I think bigger picture, the dollar still is going to remain under pressure, and that the precious metals bottomed in December 2015. And what happens in the short term, if there's another so-called shakeout and gold trades back below 1300, fine. But we've just had a really nice dollar rally, and gold really didn't break 1300.
Yeah, so yeah, I'm thinking it would imply after this respite one more surge in the dollar. And talking about the dollar and moving over to stock indices, Peter, the Russell's knocking at the door of a potential new high, and part of the reason is it seems to perform better with a strong dollar than with a weak dollar because it's domestic, it doesn't have to import. So maybe a cue for when the dollar is going to turn bad again would be the Russell. But if you're a dollar bearer and you also think that there's, could be problems with rates and the stock market, this could end up being a great shorting opportunity when the dollar turns, don't you think, the Russell?
Yeah, and I understand people buying it because of that, but people understand that the Russell is very sensitive to changes in economic activity and also in interest rates. And of Russell 2000 balance sheets, about 40% of the debt is floating rate. Well, anybody who has looked at LIBOR has seen that that LIBOR has gone up, has basically doubled over the past year. So the cost of capital is going up a lot for a lot of these small companies that everyone's piling into. So you have a rise in interest rates that's going to be impactful to their cash flows, and growth that still remains mediocre, and a Fed that continues to tighten, and an index that is very expensive. So, you know, outside of the short-term algorithmic, machine-driven rise in the Russell because the dollar is bouncing, I think people should really expand their thoughts on whether this is self-sustaining or not. I'm not of the belief that it is.
Okay, so the Russell leading the way, I don't know either because I've rarely seen the Russell lead the way. If it means anything, if it's constructive. I always thought they were more of the speculative type stocks, at least they used to be, you know, more tertiary and higher risk stocks. So maybe it's more of a sign of animal spirits and speculation because
yeah, that's what it is.
Is that what it is, buddy?
I mean, a big chunk of Russell 2000 companies don't make any money.
Okay, so that's speculative. So everything's on the come there. And then I look at the NASDAQ 100 here, Peter, and for a while I've been saying I think that we have a shot for one more high. This was, you know, drive one, drive two. I know guys that are looking for a failure here around 69.90, but I'm looking for one more high around 7,300. But that would leave the market in a position, Peter, where we have the Russell making a new high and the NASDAQ 100 making a new high. But both of those events could definitely occur without the S&P making a new high and without the Dow making a new high, and I'm sure there's other averages. And I think this will be the first time in a long time that the S&Ps weren't leading and the Dow leading to make new highs and are lagging by that much. What message do you get from that, that potentially we're going to make new highs in Russell? That looks like a layup, and possibly in NASDAQ 100, but both the S&P and Dow do not look like they will.
I mean, it's a good question. You know, I think the stronger dollar is where the bounce in the dollar is going to potentially impact the big Dow stocks and the, you know, big multinational focus of the S&P. So maybe that's one explanation. While the NASDAQ, while still susceptible to the same issue, is obviously being driven by, again, 5 or 6 stocks. I think that the most important thing people continue to have to pay attention to is that the monetary tightening is beginning to pick up, particularly with quantitative tightening going to 90 billion this quarter and 120 billion in a month and a half. And being reminded again that QE in the Europe is likely going to end in September, the latest December, and that negative interest rates next year are going away, and that these are all major headwinds. So yeah, try to scalp out maybe another run to the highs here, but to me, risks are growing tremendously with this rise in interest rates, with this monetary tightening, and people just have to be careful and be very nimble if they're trying to catch, you know, long side moves here on pure momentum, from pure momentum reasons more than anything else.
Isn't this monetary tightening, Peter? Look at my screen, $71 crude. You know, a few years ago when crude was in the toilet at $25, $30, all commentators were saying that's a tax cut. That's a tax cut that that consumers were getting. So isn't this a tax increase and also kind of a tightening in the economy with a bull market happening in crude?
Yeah, I think I read in the Wall Street Journal that about a third of the tax cut will be offset by the rising gasoline prices if gasoline prices stay at current levels. Now, hopefully we see higher wages, but yeah, you can't look at a tax cut in isolation and then there are offsets. There are offsets with oil. Anybody who uses a credit card and doesn't pay their monthly bills in full is seeing higher credit card interest rates that will also be an offset. So you can't do an all else equal analysis when you're looking at the tax cut because of some of these offsets.
Okay, so I wanted to show your website for people to subscribe to right here. But I also know that you have a new venture going as a RIA, correct? And
yeah, CIO of a wealth management firm.
Okay, who are you working with there? Anyone that we would know? Huh?
No, nobody that you would know, but
okay,
good start so far.
Okay, good start. And people could contact you. You don't have a minimum. You accept all kinds of accounts, retirement accounts, cash accounts, everything.
Yeah, we do full investing, planning, insurance, and all that. I'm obviously focused on the investment side, helping people create portfolios and doing my own investing for them, as well as in a broader type investment plan. So anybody looking for a new advisor or firm should certainly reach out to myself and us, and we can help out.
And with your commodity theme, Peter, are you playing certain commodity ETFs to the long side? I know you mentioned agriculture last time, I believed. You really are bullish commodities here and think it's embryonic, don't you?
Yeah, I think there's been a big reduction on the supply side in commodities the last couple of years, and so this is more of that rather than a big increase in demand. But you do have some decent demand, which also certainly is helping. So one agriculture ETF, and then there's some more general diversified commodity ETFs that I think are attractive. Now, these are tough products in that you have the futures role that always clips you. So you sort of rent commodities as opposed to investing in commodities.
Or instead of marrying them, you just date them, Peter?
Exactly.
All right, so thank you for making this date that we didn't have scheduled today, Peter, and filling me in with, and our community with what your thoughts are. You still have a lot of conviction about commodities, and if we got a break to 1280 gold, you would like that, and you're still positive silver, and you think that this dollar rally still is in a structural bear, and this is just counter trend. Am I reading you correctly?
Yes, that's correct.
All right. Well, thank you again for your time, Peter. Everyone, thank Peter for his time today. You could follow him at Peter Bookvar, and you want to give the name of the RIA again, Peter? Maybe you could put it up on your website up here, so next time I could show it.
Yeah, it's a Bleakley Advisory Group, and the website, as you can see, is bookreport.com.
Okay, so all you have to do is get a hold of Peter if you're interested in having him manage your money with the great eye that he has. Give Peter a call and discuss it. I think he'll do a great job in this transition period from one-way streets in the market to knowing what sectors to be in at the right time. So thanks again, Peter. Have a great May, buddy. Good hunting.
Thanks. You the same.
Okay, everyone, that's a wrap. See everyone for Turnaround Tuesday.
Dale. Sorry
I'm sorry, Stel wanted, we're going to wrap it. Stelio had a correction.
No problem, sorry. Yeah, I just wanted to correct what I said about Mexico. I think what I read, I probably misread something, is the current president cannot actually rerun for president. So, but I did read that there was a 20-point poll by somebody, and this happens to be a leftist guy who used to be the mayor of Mexico City. But basically, my point was that the race doesn't seem to be very close so far. But obviously, we know everything can change. But yeah, sorry about the slight error, and thank you for the people who pointed it out to me. We cannot get everything right. We're only human.
That's true, Stel. And I went to a Mexican barbecue, and we were having such a hard time because the beans kept slipping through the grill. So anyway, thank you for the correction. Thank you, Faith. Thank you, Faith. Thank you, guys. See you tomorrow. And remember, don't just count your pips, count your blessings. Remember, if there's not much to do, don't worry about it. You'll end up getting slapped in the face with a good trade. And I just want to mention one more time that this webinar is being sponsored by Forest Park FX. They're the broker with your broker solution. So if you're not comfortable with who you're trading with, get a hold of Trent and he'll find someone to meet your demands in this demanding industry. And that's a wrap. See everyone tomorrow for Turnaround Tuesday.